Marcus Grubb, Managing Director of Investment at the World Gold Council. A very good morning to you. We shouldn't be surprised there is so much demand for gold. The big question, I suppose, for how long is that going to be sustained?
Yes, well, this was a very strong quarter for gold demand, and the rise in overall demand was really driven by investment. Investment was up 33%. If you cast your mind back to the third quarter, of course, we had the Eurozone debt crisis just getting going. And at the same time, you had the debate in the US about the federal debt ceiling and the downgrade of US sovereign debt. So that drove very strong gold demand in Q3. I think if you look into Q4, though, we're still seeing very strong demand, obviously in Europe, with the continuing crisis around Italy. BTP spreads to bonds rising for over 5%. I was in Italy actually earlier this week talking to investors, and we still don't have a solution to the Eurozone debt crisis. There is no lender of last resort yet in the Eurozone. So overall, we still think you're going to see strong investment demand also in the fourth quarter of this year too.
I mean, it was quite interesting the third quarter as well, because there was that feeling that maybe gold was in a bit of a bubble. There was that price drop back in September.
Yeah,
were you surprised that the investment demand in Europe up 135%?
Absolutely. I mean, it was a remarkable quarter. You had that huge rise in price to 1921 intraday, then it went all the way back down to 1550, and then back up to 1600. And I think what you saw was, despite that volatility, certainly on the investment side, demand held up very well, in particular in Europe, and it was the largest quarter for bars and coins in Europe for over a year and a half. And if you look at the ETF number, 77 tons, half of that was European buying as well. The problem, though, is, as always happens in the gold market, there was a flip side to that, and Indian jewellery was actually down 26%, precisely because of that high price volatility, which, of course, the Indian jewellery consumer doesn't like.
We give the gold price on a regular basis, almost every day on this channel. And up to about 2 months ago, it was fluctuating, climbing, falling back. It's been stuck around $1,700 an ounce for a long time. Why do you think gold has kind of stopped reacting to every twist and turn in the sovereign debt crisis here in Europe, which it was doing a few months ago?
That's a very good question, and I think it's largely due to the fact that, as we saw at the end of Q3, you are still seeing flows into the US dollar. When investors get very concerned about multiple possible outcomes to a financial crisis, and that is where we are now, in sort of statistical terms, they call it an S-curve. It's a discontinuous set of solutions. Investors price in all kinds of possibilities, and that means typically they move out of more risky assets, they move out of equities, they move into short-dated bonds and into cash, and they even move out of gold because they tend to take profit in it to shore up losses in the rest of their portfolio and wait in cash to redeploy their resources. And I think that's what's happening. And
that's very interesting. So the gold's still being used to pay for losses in other areas.
Absolutely. We saw it in Q3, and I think it's why gold is sitting in a range at the moment until we can see more clarity as to what the economic outcomes are going to be.
Do you have a forecast for central bank gold demand?
We do. That's a fascinating area because the behaviour of the central banks has changed dramatically this year. This quarter is also very interesting. To the middle of the year, you had purchasing of 200 tons. For the past 15 years before last year, you had net selling of around 400 tons per annum by central banks. So it's a huge change. Now, this quarter, there's another 148 tons has been added. However, we can only identify about 40 to 50 tons of that purchasing. So there's 100 tons of new purchasing this quarter from central banks around the world that is unaccounted for. And this is partly because central banks don't have to reveal immediately who the purchaser is. We can't say who it is. We don't know exactly who the central banks are. But if you look back over the last year, the buyers tend to be those countries that aren't suffering the debt problems we have in Europe. So they tend to be the surplus countries in Latin America, Central Asia, and of course the Far East. So obviously we suspect the buying is coming from those central banks.
How do you see gold as an asset changing in the way it's held, changing in the way it's traded, how it's regarded over the past few years? And there are some people who say, you know what, gold has become almost like a currency in its own right now.
Absolutely. I think that's absolutely true. And if you look at the history of the gold market over 30 years, there's a section in our recent report on this, the gold demand trends. Gold is becoming more invested in by investors. You're seeing it increase in portfolios, but it's still way below where it was in, say, the 70s or the 80s. Many investors still don't own gold, but you are seeing a shift. So the share of investment is rising as a proportion of annual demand for gold. You're seeing more institutional investors start to use gold as a diversifier, as a hedge against risk, a hedge against future inflation in their portfolios. So gradually you are seeing a change, and as a result you've seen jewellery demand gradually declining. although it is still about 50% of the market. So it's worth remembering, we don't think gold is in a bubble at these levels because the demand is still very strongly underpinned by India and China and jewellery demand, but its popularity as an investment asset has definitely increased. And the big final point about that is it is a hedge against fiat currencies and a hedge against currency devaluation. So especially, for example, in the Eurozone, it's particularly attractive at this time as an investment.
Marcus Grubb, Managing Director for Investment at the World Gold Council. Really good to talk to you. Thanks very much indeed for coming in and breaking all that here on Bloomberg.